All right, Joy, the U.S. jobs market shocked everyone last month with its blockbuster February report of more than 300,000 new jobs, but don't expect the same results for the month of March. Let's take a look at the numbers right now. U.S. employers added 103,000 jobs this month, the fewest in 6 months, though the unemployment rate remained steady at 4.1%. And joining us now to talk about all of this, Rachael Aiken with Rockland Trust. Rachel, thanks for being here this morning.
Thank you. Good morning.
So, first of all, your reaction to these numbers, not as good as they expected, but still the unemployment rate is good.
It is. It's definitely a tight labor market. We saw 103,000 jobs created, yes, light from the 178,000 we thought, but if you look at the trend, for the last 3 months, it's 202,000 jobs created, and that's still a good, strong labor market.
And so do you see the trend continuing at this point?
So really, anytime you see the market, the job market create jobs upwards of 100, 150,000, we're going to be looking at probably an unemployment rate that may tick down. But really, the economy is strong, and you're seeing consumer spending and businesses starting to pick up spending, and with that comes job creation.
So let's talk about tariffs, and this could kind of factor into the economy as a whole. The president says he's considering more tariffs on goods imported from China. How do you see that factoring into the overall economy here in the U.S.?
So tariffs are just another brick, as we would call, in that wall of worry that the market has constructed. If it's not interest rates or inflation, it can be what will happen with fiscal stimulus, and now tariffs and trade have really come up to the top of that. What it really means for us is that we could see some inflation at the consumer level, and we could also see an environment where businesses have to look at higher costs, and again, that may hurt their profit margins.
And that could be passed on to the consumer
Yes.
as well, so that's
Yes.
something people have to watch out for. Just want to talk too about the stock market. It's been going up and down over the last few weeks. What should people do? Should they just kind of stay calm, as the advice we always hear about these things?
Stay the course. I think one of the elements that we try to remind our clients at Rockland Trust is that volatility is not a bad word. I think last year we became very complacent. The market really had little, if any. And normally you do see volatility. A normal year you'd see about 15 days where the market would go down 2 or up 2%. So to stay the course, stay invested, and to have a long-term strategy.
Stay the course. All right, Rachael Aiken, thank you with Rockland Trust this morning. We're going to send things back over to you, Joy.